Today's headlines could mark a turning point for the entire digital asset ecosystem, as the President of the United States has just inked an executive order that officially paves the way for cryptocurrencies to be included in retirement savings plans, a feat many observers thought was years away. At the same time, Ripple is making headlines of its own by announcing the acquisition of Rail, a top-tier stablecoin issuance platform, in a deal reportedly worth $200 million. These two developments, when taken together, may fundamentally reshape both the macro and the institutional landscapes for XRP and the broader crypto market. In the minutes following the White House announcement, XRP surged by more than 4.3%, climbing to a fresh intraday high near $3, while Bitcoin reclaimed territory around $116,000. Ethereum led the mid-cap charge, rallying some 6.7% to about $3,840, and smaller tokens like Stellar Lumens and Hedera Hashgraph jumped nearly 6% and 5% respectively. This broad-based uptick suggests that capital is once again flowing into altcoins, driven by an underlying narrative of renewed institutional confidence and a renewed belief that alt season may not be dead, but merely taking a short hiatus. The executive order itself is a watershed moment. Traditionally, retirement vehicles such as 401(k), and IRAs have steered clear of digital assets, citing regulatory ambiguity and the specter of compliance headaches. By putting federal weight behind the notion that qualified plans can legitimately hold crypto, the administration is effectively opening the floodgates for decades of retirement capital, think trillions of dollars, to find its way into the blockchain ecosystem. And among all digital assets, XRP stands to benefit in a unique way. With Ripple's emerging stablecoin, Ripple Dollar, Rust, gaining traction in Asia and beyond, there is now a clear pathway for retirement plans to gain both price exposure to XRP and stablecoin yields within the same strategic framework that, of course, this comes against a backdrop of expected monetary easing. Goldman Sachs analysts continue to peg the likelihood of a Federal Reserve rate cut at around 80% for September, with whispers of as many as 3 rate cuts before the end of 2025. Historically, lower interest rates have acted as a powerful catalyst for risk assets, from equities to cryptocurrencies, by reducing the cost of capital and encouraging investors to chase higher returns. For XRP, which already boasts one of the fastest settlement protocols in the industry, this could translate into both a speculative upside and genuine utility demand from funds seeking efficient cross-border settlement. That Ripple's strategic acquisition of Rail further cements its ambition to build a one-stop financial rails provider. Rail's expertise in minting and managing compliant, fiat-backed stablecoins will slot neatly alongside Ripple's existing suite of services, from cross-border messaging to on-chain liquidity. It represents Ripple's 4th major infrastructure buyout, following Metaco, Standard Custody, and its own accelerator arm, RippleX. By integrating Rails technology, Ripple can offer institutional clients an end-to-end solution, from issuing yen or dollar-pegged tokens to settling global trades via XRP, all under one roof. Meanwhile, on the regulatory front, the Commodity Futures Trading Commission has taken the extraordinary step of classifying XRP as a non-security in its event contracts. This formal recognition removes a lingering cloud of uncertainty and sends a clear message to institutional custodians and asset managers that XRP can be treated as a bona fide product, not an unregulated token. Adding further intrigue, Capitol Hill insiders say a closed-door Senate hearing is scheduled for later today, where members may discuss finalizing the SEC's lawsuit resolution framework for Ripple. If that matter reaches a positive conclusion, we could see XRP's legal risk premium evaporate almost overnight. When you stitch together these threads, federal endorsement of crypto and retirement plans, anticipated Fed easing, Ripple's bolt-on of stablecoin issuance, and definitive regulatory clarity, the picture that emerges is one of accelerating mainstream adoption. XRP is no longer confined to the fringes of speculative trading. It is being woven into the very fabric of retirement strategies, corporate treasury operations, and cross-border payment corridors. As these adoption pathways multiply, the role of XRP is evolving from a standalone digital token into a critical piece of global financial infrastructure. If you found today's update illuminating, don't forget to hit like, subscribe, and ring the notification bell so you never miss an episode of our Swell coverage. Drop your thoughts below using the hashtag XRPRetirement to let me know which of these developments you think will have the biggest impact on XRP's journey into mainstream finance.